No worries. Got a few people online and a few questions, several emails to go through. Um, Quite a bit of noise out there in the marketplace in terms of what's happening. There's a bit of safe haven thanks to the um, sell-off in equities, which has been quite drastic over the last couple of days or last week. I can show you the S&P 500. That's the S&P 500. We can see the sell-off there, which has been it's broken that major trend line. It's also broken these lows here. It's found a bit of support here, but I dare say that's going to probably get broken. There may be a bit of a pullback and retest of that. But this is the VIX. As we can see, there's clearly a lot of protection coming into the marketplace. And we're seeing that particularly in the yen and also in gold. Where's gold? We can see that in gold as well, which will affect the rand. Um, Nice little bounce and retest there. I kind of get the feeling that the US dollar, which is traditionally a bit of a safe haven go-to, or the US bond market, is largely being ignored at the moment. But I would expect that the US dollar to continue gaining strength as this sell-off continues. It's a bit of a dichotomy in terms of that the US strength has been on the back of the potential raise in rates, but this sell-off in equities is also on the basis of the European weakness, and so there's going to be that confusion where will the US raise rates if the global growth is falling or is lagging, and there's no growth coming out of Europe, and therefore that won't give any growth to the US, because obviously the US need to sell their products to someone. They can't be the only one growing. There needs to be someone else growing as well, and therefore maybe the interest rate rise will be delayed. It's not, they were talking June next year, now they're talking September next year, and if this continued weakness in Europe sort of gets hold, which we expect it to do so, then perhaps the rate rise won't be there at all, and therefore the US dollar strength is falsified in a sense, and we should get a retracement of that. So that I start to feel that happening in the marketplace. Price action towards the end of the week was obviously very much stronger. US, as we can see, these little the attempted phase two stopped and turned back around again. But it, in terms of things like the Aussie, it's just really made a double bottom, and I don't necessarily see the US dollar's strength continuing at this stage. It might sort of push through until December, but I wouldn't be expecting. I'm not looking for the Aussie to get down to sort of 75 now. The euro would obviously continue to weaken because of its problems, but that'll be more a euro story than a US dollar story. And so I can't see the Aussie getting down to 75. It may even struggle to get to 80 now, with how reasonably higher interest rates and the safe haven bid. People go looking for yield in Australia and New Zealand. Interest rates are obviously a lot higher than most other OECDs, and therefore they will attract that kind of protection flow, and you'd see some strength coming back into those two currency pairs. Will the Aussie get to parity? Doubt it, but it might get back into the mid-90s and then chop around again. So there's a bit of noise out there. It's not as clear as it was a couple of weeks or months ago, and I'm just not so sure if I'd be looking to sell the Aussie in a longer term frame. Even though that ring high sort of looks attractive to trade. And so does the pound. Again, I don't see, the pound is reasonably strong, but will be influenced by the European story, because that's their major trading partner. So, a bit of white noise coming out of the market. So let's go to the emails. Just before we go to the emails, just looking at the calendar, we've got a few Muppets out talking this week. Other than that, it's a pretty quiet week in terms of news. If we just put on the red dots, we'll see. We've got Muppet number one talking 3 times this week. He's really out there pushing his agenda, which is not much. His agenda is to try and control inflation, and he's not doing that very well. We've got the US inflation coming out on Wednesday night, Canadian inflation. So a bit of inflation data, which is key for the central banks to, that's their mandate, is to try and control that, and they'd obviously want to see it higher. UK's decent, 1.4. That's fabulous. You don't want it in the threes because that's going a lot faster than wages. But you certainly don't want it down in the 0.1s. You want it around between 1 and 2 is where you want your inflation. So the UK is sitting sweet, but the US, which is sitting at 1 and or 0.1, and the Canadians are sitting at 0.1, is not where you want. And so the European inflation is not out this week, or not on this anyway. And their inflation is even worse. So that's the key data. It's not major, but there's could see some volatile action around that. Core CPI. There's no European CPI, is there? Or German CPI. Look at that. It's flat. US. There we go. European CPI 0.3. Yeah, just a few things to keep an eye on. Okay. So, looking at the first question, I think was the euro. Certainly, there's quite a bit of support here, which the market's bounced off. Larger support sort of around the $1.20 area. But we can see this high here between 24 and 25 is that a bit of a support zone. Certainly got down to that. We're getting well into the oversold territory with these, connect these highs, and we can see this bit of a wedge forming in here, and you'd expect maybe to find a low somewhere around here. And if that US dollar does turn around and become weaker, then you've potentially get that bounce in the euro. Although I wouldn't advocate buying the euro at this stage, I'd certainly be looking for shorter trades. So that's the overall trend of it. We're now looking at this. It's under this trend line support. It's a pretty steep trend line. Looking at this little cycle off that trend line, it's come back to this 61.8. That's nice. 127.50. I would have preferred it to sort of get up to around 128.50, 129. These lows here. It didn't eventuate. There is a bit of hidden divergence there. But after that we've got convergence. From this point on, there's been converging, and that's a reasonable setup. Look, trading out here, we're not anywhere near a major support line. It is a minor one. That's okay to trade from. We're certainly not near the moving average, and I'm not sure if there's a 20 somewhere in there. So, yeah, the 20's in there. When you look at these, what we're seeing, we do see divergence here, and this is a reversal bar. I just don't. I wouldn't be trading this. I'd love to be short euro, but I'd prefer to be trading from a position of strength. And whilst this is looks like a great setup, I just kind of get the feeling that this might be frothing about here whilst the market decides as to where the with what the future holds in terms of the US interest rates and European global or European growth. So there is a potential that it could get down to here, down to the 124 major support level. But I wouldn't be risking the house on it. 0.125 is okay. That's a reasonable approach to it. I just think that you might get some more froth here when you're looking at this. Okay, it's against the trend, but it is only one sort of reversal bar against that trend. And phase twos can be really tricky to trade. And that potentially that phase two is going to continue. So I don't know if I want to get caught here. Quite literally, I'd prefer to see or stay out of this. But that's just me. That's my opinion on it. If you like that, the argument you make for the trade, is the argument you make for the trade in terms of your scoreboard is fine, and your risk allocation is fine. I can't fault that. That's just my hunch on the markets. I just don't see. I mean, these are the majors, right? Your 6 majors. And whilst they all look like they're turning back into a new phase one, I just don't know. Apart from the yen is the only one I'm convinced of, because of the crap that's coming out of there and out of their politics, and the bit of a safe haven flow. And that's obviously well and truly in a phase two. Now, if that's sort of doing a phase two, then you'd expect these others to also do their phase two. Yes, this reversal bar on Friday would perhaps convince you to go short. I'm just not convinced either way. I don't want to be. I'd rather stay out of the market at this point in time. In these 6, I prefer to be looking at other crosses. Something like the euro pound, which we'll get to. Cable, similar story. Looks great as a good setup. Great little channel there. The Scottish story is well and truly over now. So that was that buyback, but I still see the POMs producing great figures. Came back to halfway. It's not a major. This, as you've highlighted, this is only minor. But it's reacted to it. Yeah, again, technically, it's all good. I don't know. Again, one other thing you might want to look at is whether you're looking at the euro. It's been some time since it's been to the other side. We can see this cycle under here. Let's just look at this cycle across here. That cycle there, we went from 80 odd to down to 20 and then back to 80. We haven't been back to that level for some time, and that's the same on all of them. And so I kind of expect that to happen at some point. With the yen certainly well on its way to getting down to there, and then you might be looking at taking that long. But quite a lot of them haven't been down to the other side of the momentum indicator for some time. So I do expect that to occur at some point. Technically, I can't fault it, mate. I really can't. It's just something in the back of my head says leave it alone at this point. There's dollar rand. Yeah, big resistance here, which would make you a little nervous. But this is on the weekly. That said, if this channel is true, you've got a bit of an inner channel here as well. Are we repeating this kind of action? It's a little hard to tell, isn't it? That was a major resistance line, and it broke, finally got through it, and then made a higher highs. But that little ring low there is ideal, and you're targeting the previous high, okay, and your risk reward on that is 1 to 3. 3.5, is it? Reward is 125 bucks, and your risk is what? 92 bucks. The hidden divergence, yes. Support line, yes. Fibonacci, yes. Again, this looks great. As gold strengthens though, on the safe haven, you'd expect the rand to strengthen as well. Yeah. Okay. Risking 1 to get 1.3. Not. I mean that does look great in terms of that cycle. There is a soft, as you mentioned, a soft level there. Very soft level. But if this rally here is, as gold sort of gone nowhere to back down to its major support, the US dollar is getting stronger. And I just don't know. I have been advocating a strong US dollar for some time, and into next year. I'm starting to reassess that opinion. And as gold gets stronger, this will get weaker. Yeah. But again, your momentum's coming off the better side of 50, which is good, as it did across here, and as it did sort of off here when it took off there. So your momentum's in the good space. There's potential. You've got your hidden divergence, from this to here. And there's a low test off the 50 EMA and with good bar again. I can't fault it. Technically, it is sound. And I don't know about the 1.35. If it does get through there, it'll probably go higher. So I'd maybe split your order and have half of it hit targeted here and the other half to see how far this could go. Yep. Okay. Thank you for putting those in. Again, we're back to this euro. You've heard my comments on it. Are you online? No, you're not here. It's technically, as I've said, I can't fault that little ring high there off to the 61.8. There's a support level there that you've highlighted. I would have personally preferred it to get up to around 129, 128.50. These lows. It's shied away from 128. Below EMA resistance, horizontal, RSI convergence, bearish price action. There. 0.25. Risk reward 1.4. Target is 24.20. Okay. Can't fault it. The only thing I might say is that appropriate, but that's just because I have a hunch that this is, I think the run is finished for the time being, the US dollar run. For I'll show you the US dollar in a sec, but to me that's just a hunch, and my hunches are sometimes right, sometimes wrong. But if you have a look at the US dollar index, which is, this is it here, it's had a fabulous run. This is going back to, this is 12 months that you're looking at. 12 months of data. Yes, it's bounced off the 20. And it looks very similar to the euro, and the reason for that is that it's, the euro's over 50% of this basket of currencies, which is what the dollar index is. But you look at that, and we've got there's some divergence here. There's certainly a sell-off in the momentum, and it could or should sort of kind of pull back into this area here, around the 84.10, and I kind of get the feeling, and that's what's going to play out. However, that's just me personally. Now with this one, you are aware that in effect this is the the euro, the dollar Swiss and the dollar euro dollar are highly correlated, and they're upside down because the US dollar is the terms, not the base currency, when it's against the Swiss. But it's in effect a very similar trade, so you need to be aware of that when you're looking at your capital allocation. Okay, the Swiss does get some safe haven flow, about as much as the US does. So you need to be aware of that. Technically, it looks good, and you could trade it. But my feelings on this one are the same as on the euro. And I'd just be careful of it on its own, but if you're trading the euro, I'd also be saying, well, do I really want 0.5%? If you're doing 0.25 on each, do I really want 0.5% exposure to both of these, or 0.5% trade to effectively the same? Yep. Dollar Swiss. It's kind of getting up there, isn't it? Bit of a resistance level up here on the high test bar there. Yep. Okay. Pound Kiwi. Now, fundamentally, I like this. Technically, you've got the 50 coming off, yeah. You're bouncing off, not quite off 2, but 2,100, what is it, 2,000? Is this today's bar? Did you send me this? You sent me this. You did send me this morning. Could I put a buy limit in it? Yes. Okay, so let's go and have a look at this thing. Okay, so nice bounce off that. It's a reasonably good level, absolutely. So the question was, could I put a buy limit above the high? So your high here is 205.80, so you're looking at 205.85. If the market's obviously opened up and run higher, yes, you put your buy limit order in at that price. Now that it's come underneath it, I'd be going to place my order at 205.85 again, rather than sort of jumping in at this price. Making sure that the buying is coming back into the marketplace later today. Momentum's kind of in the middle, which may suggest that this phase 2 is not yet finished, and that it might be sort of coming down here or potentially even lower, but I like the fact that it's held that level there, and which also happens to be the 50 fib, or close to that 50 fib. If we move it to the low here, it's only the 382, but this is the, well, that's the first close above the 50, isn't it? It's only just above the 50. But that one there, which you've highlighted, which is fair enough. Yeah. Fundamentally, I'd prefer to be in pounds than Kiwi. It could get a bit choppy like this with sort of safe haven flow on the Kiwi's high rates, but I think the UK economy is doing very well. May stumble with the Europeans, but the Europeans have been crap for 5 or 6 years now, and the UK has done very well. So maybe this is worthy of looking at. The Euro Pound was another one. I haven't looked at the Pound Aussie yet. Well, there's another one that you'd potentially look off. We've got this strong bounce, or strong buying coming off this level here. Which should what? Off around there. And again, it's about the 50 fib. Yeah. 618. Yep. So they're all reasonable to be looking at, I would suggest. So that one's a good one, and it's kind of staying away from the US dollar story at the moment, which is good. And your question of putting a limit order in, yes, is a good idea. Okay, Euro Pound. Yeah, short Euro, long Pound. That's a reasonable thing to be doing. Certainly a lot of selling here. I do have one issue, which I'll come to after I answer your questions. Have I identified hidden divergence? Well, there's nothing technically wrong with that. I'd kind of prefer to go from this point here, which means it's that high, and that doesn't necessarily give you a divergence. If you look at it, all these closes were below the 50. Yeah, this is the first close below the 50. So this to me is the start of the of this cycle. Yeah. It did have a higher high, which might have indicated that this downtrend is under threat, but that's where I would have had the hidden divergences from that high there, which means you'd have your fib from that high there as well. Your fib is okay, but I would have gone from up there. Now the big thing I've got here is, let's have a look at the weekly, and we can see that. And if we go to the monthly, we can not only that bounce there, but across here, is quite a level by the look of it, and that'd be my concern. The weekly is showing a little low test, with sort of some divergence from this low here. It's then followed by a high test, which confuses the situation. So it has come back up to test this area here and falling away from it. That's a bit of a concern for me. So whilst technically this is a great setup, there's that major support level there that I have a worry about. However, if we look at in terms of risk reward, if that's our target, you're risking 50 odd pips, targeting 75 pips. It's 1.5. Which it could do, but it could shy from that as well, and it could easily also break straight through it. Who knows? We're certainly seeing the selling where we want to see it, and there's all the reasons in the world to be short it. It's just that that support level concerns me because it's quite a strong one. It may go down and test it again, which would see your trade successful. But yeah, it's just a little nervous of that. But technically, this is all good. Just your hidden divergence question is, I'll be looking at that. Normally, yeah, that's what you should be seeing in hidden divergence, but I just think this is where the cycles come from. Yeah. Right. You guys still there? I did. Sorry, my listing just dropped out for some reason. I've covered these before, but let's just look at yours. Lower highs and lower lows, yes. Below the moving averages, yes. Horizontal resistance, yes. RSI convergence, yes. Bearish hidden divergence. Well, no. Hidden divergence is in a downtrend. You need to see what you're cycling, right? So if you're saying that the cycle this is the last cycle, then potentially yes, you've got hidden divergence. So that's your cycle phase 1, phase 2, and so therefore you have hidden divergence. But if the last time it was on the 20, if you're saying, well, it's actually only cycling off the 20 EMA, well then is that hidden divergence? Well, I suppose you could say it's class C hidden divergence. That's your cycle there. Yeah, so it's just a matter of being aware of what it's cycling along. No, sorry. Otherwise, everything else is there for you to be looking at this. As I said, I just not my feeling on the on this is that it's not over yet. I think there's more of a pullback to come. Similarly with the Aussie, it's come back and retested this this previous lows. It opened weaker this morning, but it's quite a level here. If we look at it, in terms of that's where it was almost 10 months ago, and it's bouncing off that. Yes, this got smoked on Thursday, Friday. I just don't know if this is over yet, and I can't see it up at 90, but I just see it just mess at this stage, and tricky, very tricky. As I said, I'm quite happy to trade it on the shorter time frame because I don't want to be in it for and exposed for too long. Bearish hidden divergence. Again, you need to be clear on what the cycle on the cyclicity is, and where's it cycling from. The last, if that's the cycle from there to there, then you don't have hidden divergence, you have convergence. Yeah. The Kiwi. Okay, so yeah, I can see if that's your cycle from that trend line, then that's hidden divergence. Do you have trend line resistance? No, you couldn't say that. Not on this one. where's your trend line? If you go from, it's pretty bloody steep, but if you'd have to say something like that, then you don't have trend line resistance. Yep. Okay. Just to go to your email on all of these. Aussie uneasy placing order first thing Monday as Friday close of the low of the day. Yep. Any suggestion on how to handle these situations on daily trades? Yeah, look, if it's difficult to do when on a Monday morning because of the market can gap, and you can't get your order in until Axie actually opens, which is a couple of minutes after the real open. I mean, it opens at 8 a.m. your time. And by the time the market, the Axie trader opened, which is probably about 8:15, the market could have moved. In that case, it's just a limit order where you want to, at the price that you want, and obviously that would have come back and got you in by now. Yeah, are these 3 trades 1 bar too early? No. You know, if I'm wrong and the market is going to continue in a downtrend, then no, you're trading on Friday would have been a bar too early, but trading today is not. Okay, you've got those. You've got the second bar confirmation for. Is what I'm saying is like here. This is a seller bar, but this is your reversal bar. Looking at going in under here, you may not get it, but that's the ideal time to trade. You know, you've got that confirmation bar now. And if it does make a lower low, then the expectation is that it should continue down. Yeah. Wait for Monday's bar outcome. As I said, if the trade is today, if you're technically right, and technically the trade is for today. And I highlight the word technically because I personally don't know if it's really there. Pound is similar, but Friday's bar looks like a low test bar, so waiting for Monday's outcome. Yeah, pound's Friday bar was, well, it's more of a doji really. It's sort of kind of closed in the middle. I haven't measured it, but what are we looking at? A high of 134 and a low of 073, so that's 26 and 34 is 60 pips, yeah. And so that'll make it 30 pips. Which means the middle of the bar is 600. The middle of the bar is, the low is 007. The close is 73. So that's 126, 127 pips. Oh, fuck, that's like 62 or something pips. Yeah. So if it closed, confusing myself now. Anyway, visually it does look like a low test bar. Maybe a little bit more buying than there is in the selling. 62, yeah, so the midpoint is 69, closes 4 pips above the mid. So you'd say it's a low test bar. And yes, not ideal selling like the Aussie was, right? Or even the Kiwi in terms of, okay, we can still see the selling intention. The Euro, there's still the selling intention. Yep. Also, a lot of the Euro and pound crosses look to be setting up for either short or long trend continuations. So, all setting up for phase ones. Will you have time to go through all the crosses on Monday? Sorry, mate, not now, but I prefer to be trading in those crosses than getting involved in the US. The US to me is just a little tricky right now. A lot of the US dollar crosses with wide spreads also seem to be setting up, such as the Rand that we looked at, the Czech, Mexican peso, the Norwegian kroner. Yeah, my view. Look, I certainly wouldn't want to be buying those exotics in terms of shorting against the US. Going along them. Let's just have a quick flick. All right. In these tricky ones out here, excuse me. You'd want strong reasons. With the spreads that you're paying out here, you'd want pretty strong reasons. You know, that's a good strong reason. Nothing wrong with that. I certainly wouldn't want to be shorting these pairs or shorting the US against them either. So that one looks good. Clear buying intention. Um, that one not so good. There's a bit more of selling than buying. The ruble, shit. That's a dodgy place to trade. The zloty, again, you'd want it reasonably strong, and that seems to be quite a level that it's bounced off. Norwegian krona, probably not as strong as some of the other ones. Mexican, again, don't know about that. Chinese yuan, it's tricky, very tricky. What the fuck do you do here? Do you buy it or you sell it? It's a very strong level, isn't it? Look, if this is the lower low today, I'd be looking at selling this ring high here. Trading getting it out through all this crap here. However, if it's a buying, then buy a bar by tomorrow morning, then maybe you look at taking it back higher. It's a tricky one. Looked at the Rand, the Sing. I'd leave that one alone, well alone. CAD, they had great jobs data out on Friday night. Went from 7 to 6.8%. And as the US continues to get stronger, then they'll benefit because that's their major trading partner. So bullish CAD still. Would I want to trade this? No. It's these two pairs. I mean, look at that. That's a Fibonacci from there to there, and we can see that the 50 is pretty big resistance there. So no, I wouldn't trade that pair, but I'd certainly trade the CAD against other things. And on that, going to your crosses, such as the Euro Pound, the Pound CAD, maybe not that one, but your Pound Kiwi, your Pound Aussie, and some of the Euro ones. Do you Euro Aussie, is it setting up for a short? No, but that head and shoulder pattern, fuck me, look at that. We're going to go long here. Long the Euro Aussie. Who would have thought that? How can we buy the Euro against the fucking Aussie? Well, they may not get there, but yeah, that's interesting. Keep an eye on that one. Yeah. So, trendline resistance. I'll cover that. Yeah. So yeah, there's a few sitting up there in the US dollar. Technically, they're all good, and I can't fault you, and I won't fault you if you want to trade them. I'm not always right, but I just kind of get the feeling that there's something more to the story than trading those right now. Just a little more to it. The only one that I do like in terms of the trend is this one, and looking at it in the shorter time frame, trying to nab an opportunity in the cyclicity of that, because this is going down to the 106, or if you look at the major support level at 105.50. Yeah, down around here. It's this high here. That 105.50 level. That's excuse me. That's where this was going. So on the daily you can't sell it now, but certainly be able to look at the shorter time frames and participate in that. And that's the only trend, the real trend I see and want to trade. Maybe there are some crosses such as the pound Aussie, pound Kiwi, but yeah, the US dollar I just feel is a little tricky, and I would potentially stay away from them at the moment. Shorter time frame, go for it, but the only real strong trend here is the dollar yen. The rest of them are all bullshit and choppy, and will be choppy. Okay, that's about me done for the day, guys. The next webinar is Wednesday. I notice we've got quite a few people online right now, but some of you are saying you don't have the webinars. If you don't have the webinar IDs, just ask, email the office, QnA offices. I'm not sure why they haven't been sent out, or if you've been getting the wrong ones, but the next one, oh, she sent it out for this week. Okay, cool. Alright, then I shall see you Wednesday, guys. Good luck and happy trading. Cheers.